Welcome to the Scenario Set Piece. Throughout this series, we'll break down the numbers, costs, and how lender policy plays a part in purchasing your property in Australia. I'm Vangeli Colliers, the Director and Finance Broker of VK Financial. We are your finance teammate in purchasing your first home or investment property. Now in today's episode, we'll explain the difference between purchasing your first home under the First Home Guarantee Scheme or purchasing it through LMI. Alright, let's draw up the scenario. Okay, so we're looking to purchase our first home in New South Wales. We have saved $30,000 over the last 3 months. We assume that our maximum borrowing capacity is $405,000 and we meet all the eligibility requirements of the First Home Guarantee Scheme, which will be explained later. Now, as you see on the table on the left is Set Piece 1, which is purchasing a home using the First Home Guarantee Scheme. On the right hand side is Set Piece 2, which is purchasing your first home using LMI. Now the First Home Guarantee Scheme is widely known as the 5% deposit, no lender's mortgage insurance. Now this is a federal government scheme, however only certain major banks and second tier lenders are approved for the scheme. Now one of the great things about the scheme is that you can purchase up to 95% of the property value without paying LMI, or what's known as lender's mortgage insurance. Now LMI is a premium that covers the bank in case you default on your home loan, and is generally added onto the loan if you have less than a 20% deposit. However, certain types of applicants and professionals can have this LMI fee waived, allowing us to borrow at higher amounts. Now, because we are first home buyers under the First Home Guarantee Scheme, we have our LMI cost for this example at $0. So let's look at the table. So for Set Piece 1, we're going to look at purchasing a property through the First Home Guarantee Scheme. So the property we're looking to purchase is $430,000. Our loan is $405,000 because that's our maximum borrowing capacity. No LMI, which gives us a total of $405,000 for the loan amount. Our LVR is 94.19%. Now what is LVR? LVR is loan to value ratio and is basically the loan amount divided by the property value. Now, the lower the LVR, the less risk you are to the lender. And the higher the LVR, the higher risk you are to the lender. So LVR generally measures your risk to the lender. Now the costs of the property are as follows. So our deposit is $25,000, which is the loan minus the value of the property. Our stamp duty in New South Wales is $0, and that's because we're purchasing under $800,000. Now as a first home buyer in New South Wales, stamp duty from $800,000 or less is waived by the government. From $800,000 to $1 million, you have a discounted stamp duty rate that you'll pay, and from $1 million or more, you pay the full stamp duty. Now, our estimated legal costs are around about $2,000 and is dependent on your solicitor. Mortgage registration fees such as mortgage title searches vary between lender to lender, but we've accounted for $650 in this example, and our adjustments or a buffer we've put in there is $1,000. So our total property costs come to $28,650. Now with our savings of $30,000, we are left with $1,350 in our hand after the loan settles. So what are the eligibility requirements of the First Home Guarantee Scheme? Now there are a certain number of spots available under the First Home Guarantee Scheme. In this financial year, we had 35,000 spots available. Now fingers crossed the government keeps this scheme into the next financial year starting July 1st. If there's more spots available, we will update you. Second thing is you have to be 18 years of age and an Australian citizen. Now something that was added this year was that you can also be a permanent resident purchasing your first property under the scheme. As a single applicant, you can't earn more than $125,000 per year, or as a couple, you can't earn more than $200,000 per year. Now you're intending to be an owner-occupier of the property, so to live in the property and live in it for at least 12 months. Another eligibility requirement that was added was that you have not owned the property in the last 10 years, and you can also go under the scheme purchasing a property with a friend or family member as opposed to your spouse. The maximum property price that you can go under the scheme in New South Wales is $900,000. Now this varies between cities and states across Australia. With lender policy, you must have saved at least 5% of the property price in genuine savings. So what is genuine savings? Genuine savings is your ability to show the bank that you can save and hold money for a given period of time. Generally, lenders want to see you have saved 5% in genuine savings of the property purchase price. Now, depending on lender policy, the general rule of thumb is to save at least 3 months of genuine savings. So if you're applying for a home loan in April, you have to show that you have genuine savings from January. So January to Feb, Feb to March, March to April. There's your 3 months. Now in this example, because we need 5% of our property price, which is $430K, we need to show the bank we have saved $21,500, which we have with our $30K of savings over the last 3 months. So now let's look at set piece 2, purchasing your first home using LMI. Now the property value stays the same at $430,000. Our loan amount is $394,500. We have estimated LMI costs of $10,500, giving our total loan a max capacity of $405,000. Now our LVR also stays the same. Each lender has different LMI costs. This depends on their insurer, the type of loan, the state that you're buying, the loan amount, and the purchase price. So for this example, our LMI cost is $10,500. So here's an important thing to note. It's not $405,000 plus LMI, it's $405,000 including LMI. So therefore we have to put more of a deposit down to account for the LMI being added on later on. We also can't exceed the $405,000 mark because that's our maximum borrowing capacity. So on the table on the right, our property value stays the same at $430K, our total loan is $405,000, and our LVR is 94.19%. Now the cost for the property is that our deposit has gone up to $35,500. Our stamp duty in New South Wales stays the same because we're purchasing under $800,000. Legal costs, mortgage registration costs, and adjustments are the same, given our total purchase cost being $39,150. Now because we only have $30,000 in saving, we're actually short here of $9,150 to make this purchase work. Now with purchasing a property with LMI, you still purchase an asset. It's a means to an end. Yes, it is going to be expensive, but our goal is to get you into the property, pay down that loan, and reduce that LVR as quickly as possible. Now, what are some of the risks of each set piece? Well, under the first home guarantee scheme, there are only a certain number of spots available at each lender. So we usually get your scheme approval at the pre-approval stage and when you put a deposit down for the property at the formal approval stage too. Now with LMI, there's no scheme spot eligibilities, there's no number of spots available. You just have to meet the servicing requirements of the lender. Another risk is that your income thresholds are capped under the scheme, whether you're a single or a couple, whereas there are no income thresholds purchasing a property with LMI. Another risk is that depending on lender policy, you might have to exhaust most or if not all of your savings for the purchase. Now, let's just say you had an extra 30 grand more for this example and you wanted to leave it left over. You have to tell the bank what the extra funds will be used for. Now, it could be for a holiday, could be for some cosmetic renovations to the property, but the lender has to approve that. So there are some limitations on how much funds you can hold after you purchase the property. Now with purchasing in LMI, there are no limitations on the surplus funds of purchasing a property. So we are recording this episode on the 7th of June 2024. So if there are any changes to the first home guarantee scheme on July 1st, we will update you. We are the Mesut Ozil of home loans. We can definitely assist you with your first home purchase. Give us a call. I'm Vangeli Collis from VK Financial, your finance teammate.